$570. That's how much more one retired nurse started receiving every single month after making 3 phone calls that took her less than 2 hours combined. Not from a lawsuit, not from a new job, not from a lucky investment. From 3 phone calls to numbers that have existed for decades, to programs that were created specifically to help people exactly like her, programs that nobody told her existed until a stranger mentioned them in a doctor's waiting room. She had been on Medicare for 4 years. She had been collecting Social Security for 3. She had been paying her premiums, her deductibles, her co-pays every single month, building her retirement budget around those numbers the way she had built her working life. Carefully, without complaint. She didn't have to pay any of it. Here's what makes this story genuinely infuriating. The Social Security Administration processed her premium automatically. Medicare calculated her charges automatically. Her earnings record was compiled automatically. Not one of those 3 automatic processes had a built-in step that flags when the number is wrong and suggests she call to fix it. Because fixing it costs the system money. The system was not designed to cost itself money on your behalf. And right now, today, in 2026, that same situation is playing out for millions of American retirees. The Part B Medicare premium increased to $202 or $90 per month in 2026, up from $185 in 2025. On a $2,000 monthly benefit, the 2.8% COLA adds roughly $56. The Part B jump takes back close to $18 of that before the check ever hits the bank. So the raise that was supposed to help you keep up with rising costs, a third of it is already gone before you spend a single dollar on groceries. And for the people I'm going to tell you about today, the people paying the wrong amount, the situation is worse than that. Today I'm going to walk you through 4 specific calls that exist right now in 2026 with updated numbers, updated programs, and the exact words to say when someone picks up. And I'm going to tell you why nobody at SSA or Medicare will ever be the one to suggest them. Stay through call 4. That's the one SSA has the least reason in the world to tell you about. Before the first call, I need to show you the architecture of this problem. Because without understanding the structure, you might assume that if you were owed money, someone would have already told you. They wouldn't. And here's why. There are 3 completely separate government systems involved in your retirement benefits. They were never designed to talk to each other, and they have no obligation to start. Medicare is run by the Centers for Medicare and Medicaid Services, CMS. They handle your coverage, your premiums, your billing. The Medicare Savings Program, the one that can eliminate your Part B premium entirely, is administered by your state Medicaid office. That is a completely separate agency. It runs a separate database. Medicare does not flag your account and alert your state office that you might qualify. Your state office does not scan Medicare enrollment records looking for eligible applicants. The Medicare Savings Program was created by Congress in 1988. In the nearly 40 years since it was created, enrollment outreach was never funded at the federal level. The assumption was that state Medicaid offices would find their own eligible seniors. Most states have never had the staffing or budget to do that systematically. So the program sits there, $2,500 to $6,000 a year per qualifying senior, and the people it was designed to help pay their premiums every month without knowing they could apply. Social Security is a third separate system. Your earnings record, your benefit calculation, and your ERMAA surcharge all sit in the SSA database. None of it cross-references automatically against Medicare eligibility or state Medicaid records. 3 agencies, 3 databases, no bridge between them. 1 retiree sitting at home paying 3 separate bills that could have been lower or zero. Your bank profits when you keep money in an account, Medicare profits when you pay your premium. Neither has a financial incentive to tell you about a program that eliminates what they collect from you. So the conversation never starts, and nobody makes these calls unless they accidentally end up in the right waiting room at the right moment. Until today, call 1 is to Social Security. The number is 1-800-772-1213. When someone answers, say exactly this. I want to request my complete earnings history and verify my record for any discrepancies year by year. Here's what's behind this call. Your Social Security benefit is calculated using your 35 highest earning years. Every year of earnings on your record came from a payroll report submitted by your employer. Before the year 2000, the majority of that processing was done manually. Employers submitted paper forms. SSA clerks entered the data. Numbers got transposed. Entire years got skipped. Part-year employment at companies that closed before filing their final reports never made it into the system. An IRS and SSA joint review found that approximately 3.3% of all Social Security wage entries contain errors. Applied to the current beneficiary population, that's over 2 million people collecting less every month than they actually earned. Each incorrect year reduces your monthly benefit by approximately $100 per month permanently. On a 20-year retirement, 1 missing year of earnings costs you $24,000. 3 missing years costs $72,000. The correction is free. The documentation you need is a W-2, an old tax return, or a pay stub from the year in question. Documents that are easier to find right now than they will be in 5 years. You can do your homework before you call. Go to ssa.gov, open your My Social Security account, and pull up your earnings statement. Compare every single year of your working life against whatever records you have. Any year that's blank or shows a number significantly lower than what you remember earning is worth a conversation. Here's an important 2026 update you need to know about this call. The wage cap for Social Security taxes increased to $184,500, up $8,400 from $176,100 in 2025. That matters because if you had years of higher earnings near or above the old cap, a clerical error recording the wrong number could mean a much larger benefit reduction than you'd expect. Let me tell you about Frank, a 72-year-old retired steelworker in Pittsburgh. He had been collecting Social Security for 7 years when he finally checked his earnings record. He found 2 years missing, 1981 and 1983. His mill had switched payroll processing systems during that period, and the transition records were never submitted correctly to SSA. He had no idea. The correction added $180 a month to his benefit. He asked about retroactive payment for the years he'd been underpaid. SSA processed a 6-month retroactive lump sum, $1,080 deposited within 4 weeks. 7 years of collecting a reduced benefit, 1 phone call. 1 afternoon of paperwork. This is why this call exists, and this is why nobody at SSA suggested it. Call 2 doesn't even go to Social Security. This call goes to your state Medicaid office. To find the number specific to your state, call 1-800-MEDICARE. That's 1-800-633-4227, and ask them to connect you with your state's Medicare Savings Program office. When someone answers, say this: I want to apply for the Medicare Savings Program and find out which tier I qualify for. Now, here's the thing that stops most people before they even make this call. They assume they earn too much to qualify. They've heard the words Medicaid and low income, and they've already counted themselves out. Don't count yourself out before you check the numbers. The income thresholds are higher than most people expect, and the program covers a much wider range of retirees than the name suggests. The Medicare Savings Program has 4 tiers, each covering different portions of your Medicare costs. Tier 1, QMB, Qualified Medicare Beneficiary. In 2026, you qualify if your income after certain allowable deductions is $1,206 per month or less if you're single, and $984 per month or less for a married couple. QMB is the most comprehensive coverage. It eliminates your Part B premium completely. It covers your Part A premium if you pay one. It covers your annual deductible. It covers every copay and every coinsurance charge on every Medicare-covered service you receive. Nothing out of pocket. The state pays it directly to Medicare on your behalf. Medicare providers aren't allowed to bill you for services and items Medicare covers, including deductibles, coinsurance, and copayments. If you have QMB status and a doctor's office sends you a bill for a copay you don't legally owe, the provider can face penalties. Annual savings from QMB range from $2,500 to $6,000, depending on how much Medicare-covered care you use in a year. Tier 2, SLMB, Specified Low-Income Medicare Beneficiary. In 2026, SLMB covers your income if it's $596 per month or less if you're single, and $2,167 per month or less for a married couple. SLMB covers your Part B premium. That's $290 every month eliminated. $2,134.80 per year returned directly to your income. 1 form. Tier 3, QI, Qualifying Individual. In 2026, QI covers your income up to $1,935 per month if you're single, and $2,189 per month for a married couple. QI also covers your Part B premium completely. Important caveat: QI funding is first come, first served for the year. If you are within the QI income range, file as early in the calendar year as possible. Now here's the 2026 update that makes this call more urgent than ever. Medicare Part B's 8.9% premium hike clause back about $18 of the 2.8% COLA's $56 monthly gain on a $2,000 benefit. The raise that was supposed to help retirees keep up with rising costs went partially straight back to Medicare. For the 7.5 million seniors who qualify for the Medicare Savings Program and haven't applied, they paid that full increase on a bill the state was supposed to be paying. One critical thing that most people don't know about this program: when you enroll in a Medicare Savings Program, you automatically qualify for extra help, which can lower your monthly premiums, deductibles, and co-payments for prescription drugs. You'll pay no more than $12.65 in 2026 for each drug covered by your Medicare drug plan. So this one application can eliminate your Part B premium and dramatically cut your prescription drug costs simultaneously. 2 wins from one 15-minute form. Note that some states have higher or no asset limits for these programs. Even if you have savings, you may still qualify in your state. Don't rule yourself out before you call. Let me tell you about Robert, a 74-year-old retired letter carrier in Albuquerque. His monthly income from Social Security came in at pound 290, just under the QMB threshold. His enrollment eliminated not just his Part B premium, but his annual Part B deductible and every copay on every doctor visit and lab test he had. Robert was managing diabetes and high blood pressure. He was seeing doctors regularly. His total annual savings came to just under $4,600. He had driven past the state Medicaid office on his mail route for 11 years. He never knew it processed applications that could have helped him every single year since he enrolled in Medicare. One phone call, one form, 15 minutes. Call 3 is back to Social Security. Same number, 1-800-772-1213. When someone answers, say this: I want to request the SSA 44 form to appeal my IRMA surcharge based on a qualifying change in my income. Now, this call is for a specific group, but it's a larger group than most people realize. IRMA stands for Income-Related Monthly Adjustment Amount. It's a surcharge added to your Part B and Part D premiums when your income from 2 years ago exceeded certain thresholds. For 2026, IRMA surcharges begin at $109,000 MAGI for single filers and $218,000 for married filing jointly with 5 surcharge tiers. The surcharges range from $1,148 to $6,136 per person per year for Part B and Part D combined. Here's the mechanism that creates the problem. Your 2026 IRMA surcharge is based on your modified adjusted gross income from 2 years prior, specifically your 2024 tax return. This 2-year look-back period is critical because it means your current income may be very different from what Medicare is using to calculate your surcharge. Think about who this catches. You retired at the end of 2023 or in 2024. That final working year included a full salary. Your tax return showed higher income than your retirement income will ever show again. Medicare looked at that return and set your 2026 premium accordingly. You're now living on Social Security and savings and still paying a surcharge calculated as if you are working full-time. A spouse passed away. Your filing status changed from married to single. Your household income dropped significantly. The surcharge did not adjust. You sold a property or a business in 2023 or 2024. One-time income, never recurring. The transaction pushed your tax return into a higher bracket for that single year. Medicare picked up that number and has been charging you for it every single month since. The SSA 44 form exists specifically for these situations. Qualifying life-changing events include retirement, death of a spouse, divorce, reduction in work hours, or loss of a pension. A successful appeal can save $1,148 to $6,136 per person per year in Medicare surcharges. Many people don't file the appeal because they don't realize it exists or assume it won't be approved. The approval rate for legitimate life-changing events is high. Here's an important 2026 specific update. If your client retired in 2025 and their 2024 tax return reflects a full year of employment income, you can file an SSA 44 with 2025 income documentation. The SSA can use the more recent year instead, potentially eliminating or reducing IRMA. This is one of the most underutilized planning tools in all of retirement finance. If the appeal is approved, the adjustment can apply retroactively to the start of the affected premium year. That means if you've been paying the surcharge all year and you file and get approved, you may receive a lump sum credit for all the months you overpaid. Let me tell you about Helen, a 67-year-old retired teacher in Phoenix. She sold an investment property in 2022 for a significant gain. Her 2022 tax return reflected income far above what she earned from teaching or would earn in retirement. Her 2024 Medicare premium was hit with a monthly IRMA surcharge well over $400 per month. She filed the SSA 44 with documentation of her current retirement income. The surcharge was eliminated entirely, nearly $5,000 per year returned. One important caveat: investment income changes, large IRA distributions, and Roth conversions are not qualifying events. SSA 44 covers life events, not market events or planning decisions. So if your income dropped because the market went down, that doesn't qualify. But if it dropped because you retired, lost a spouse, divorced, or lost a pension, that does. Document it clearly and file. Now, I want to talk about something that most content about Social Security and Medicare completely missed this year. A 2026 tax change that interacts with Medicare in a way that could affect your retirement income for years to come. And if you're not aware of it, you could accidentally trigger penalties without realizing it. More Social Security adjacent rules changed in 2026 than in any year since 1983, and several of them interact in ways the original press releases did not advertise. Here's the one that matters most right now. In 2026, Congress introduced what's been called the Senior Bonus Deduction, an additional standard deduction available to Americans over 65. It sounds straightforward. But here's the trap that's already catching retirees who didn't see it coming. A single Roth conversion can erase the entire senior bonus deduction and trigger higher Medicare ERMA surcharges 2 years later. So if you or your spouse is thinking about doing a Roth conversion this year, moving money from a traditional IRA into a Roth IRA to reduce future required minimum distributions, you need to understand that the income from that conversion could push you into a higher ERMA bracket in 2028. Not this year, 2 years from now, long after you've forgotten about the decision. This is why the fourth call matters. Call the State Health Insurance Assistance Program, SHIP, for your state. This is a free, federally funded counseling service that does what it's supposed to do. Help you understand the interaction between your income, your taxes, your Medicare premiums, and your Social Security benefit. They are not affiliated with Medicare. They are not affiliated with SSA. They don't profit from you staying confused. To find your state's SHIP office, call 1-800-MEDICARE and ask to be connected to the State Health Insurance Assistance Program. RMD start age splits by birth year. Age 73 applies to those born between 1951 and 1959, and age 75 applies to those born in 1960 and later, creating a prime Roth conversion window. If you were born in 1960 or later and you have until 75 before required minimum distributions kick in, that's a multi-year window where careful planning can dramatically reduce your future Medicare surcharges. But that planning only works if you know the interaction exists, and the agencies that process your premiums have no incentive to explain it to you. That's why this call is the one SSA and Medicare are least likely to suggest. Let me show you the full picture before we wrap up, because I want you to understand just how much money is sitting on the table in aggregate. The 2.8% COLA sounds fine until you put it next to the 8.9% Medicare Part B increase, which moved the standard premium to $202.90 from $185. For the average retiree on a $2,000 monthly benefit, the raise added about $56. The Medicare increase took back $18. Before $1 went to groceries, utilities, or medication, nearly a third of the raise was gone. The 7.5 million seniors who qualify for the Medicare Savings Program paid that full premium increase on a bill the state was supposed to be paying. The retirees paying IRMAA surcharges on income they no longer earn paid their surcharge increase too. The retirees with errors in their earnings records collected their reduced benefit for another year without knowing the correction was available. And the retirees who made a well-intentioned Roth conversion this year without knowing about the IRMA look-back rule just set themselves up for a premium increase they won't see coming for 24 months. All four categories. All four bills, all still running in the background. Because no agency has the obligation or the system to stop them on your behalf. 4 phone calls stops all 4. Here's exactly what I want you to do this week. Not someday. This week. Call 1-800-772-1213. Social Security. Ask for your complete earnings history year by year. Before you call, log into ssa.gov and check your My Social Security statement. Any year that's blank or looks wrong is worth a conversation. One missing year costs $100 a month for the rest of your retirement. Call 1-800-633-4227. Ask to be connected to your state's Medicare Savings Program office. Tell them you want to apply and find out which tier you qualify for. If your income as a single person is under $235 a month, you may qualify to have your entire Part B premium of $290 eliminated. One 15-minute form, up to $6,000 a year. Call 3. Back to 1-800-772-1213. Ask for the SSA 44 form if your income dropped since the year your ERMA surcharge was calculated. Retirement, death of a spouse, divorce, and a loss of pension, all qualifying events, all reversible. Approval rate for legitimate events is high. Call 4. 1-800-633-4227. Again, ask to be connected to your state's SHIP office. State Health Insurance Assistance Program, free counseling, no conflict of interest. Ask them specifically about the interaction between any Roth conversions or IRA distributions, your planning, and your future ERMA brackets. The retired nurse I told you at the top of this video, Margaret, made all 3 of her calls in 1 week. They took less than 2 hours combined. By the time her next Social Security statement arrived, her monthly income was $570 higher, permanently, for the rest of her retirement. She could have made those calls the day she turned 65. Nobody told her to. I'm telling you to. If you know someone retired, a parent, a neighbor, a friend who's been on Medicare for years and has never once checked their earnings record, or questioned why their premium is what it is, share this video with them. That one share might put hundreds of dollars back in their account every single month.